Hi everyone, welcome back to Be Rich. In life there are very few things that scares me. Considering the fact I'm almost 50, lived quite a long time, and I've seen quite a few things in the markets, and there are very few things that actually give me a fright. But this market, which is so calm, does scare me sometimes. Why? Over the weekend, US has gone bombed Iran. Iran is threatening to close the Strait of Hormuz. Gold is holding steady. The volatility index is quite mute. This silence, could be the most dangerous sound the market is making, because it's not making any sense. It reminds me when I was in Italy and I was walking around in Pompeii, and the guide over there told me, I was asking him, during the eruption, why would people not leave? He said the problem was Vesuvius, the mountain which erupted, the volcano which erupted, which destroyed Pompeii, did not just erupt all of a sudden at one go. It was rumbling and having small eruptions over a period of years. And this one was a build-up. So the population became numb. The people staying in Pompeii were like, it's one more time the mountain is rumbling. It's probably going to let out a little steam and things will carry on. They really didn't think it was the end. So I feel like we are in that kind of a situation here. I mean, the market is so desensitized to anything. And I've been talking about it. If you go rewind back, me and Anand have been doing videos like this, where the market seems so desensitized because of so much of liquidity since 2008 crisis. We have pumped in so much of money into the market. Nothing seems to be giving it the jitters anymore. It reminds me of the people in Pompeii, because crude volatility has hit a 5-year high, and that is huge. And then we got a president in the United States who can't seem to be making a decision about anything and everything. He seems to be sitting on anything that comes to his table, it seems to be sitting there, and he comes out saying, even I don't know what I'm going to be doing. And suddenly he goes, says 2 weeks, and then he decides to attack. And so it's really confusing in terms of leadership. Then you have the Fed, who seems to be on his own world, because he seems the only one sensible enough there. And he seems to be holding rates steady, saying, I'm going to be holding steady. And there's dissent in his own ranks. The other Feds are telling the chair, like, dude, we have to cut it, and cut it right now. There seems to be pressure piling on him. While the market seems to be busy arranging teacups and china plates on the Titanic, as they say. The ship is sinking, but the market seems to be more worried about the plate settings. The S&P 500 is within 3% of its all-time high, but only a few tech stocks are holding it up, which is a funny thing. If you see an equal weightage, the S&P 500 is down, and 50% of the stocks are above 200-day moving average. 40% is about 20. This is a classic case of divergence which is happening. The breadth is thinning. The rallies are weakening. I don't know. So why does this calm feel so wrong? You may be asking me that. It's normal for volatility index to go up and stocks to go down, meaning there's more volatility, market prices start going down. That seems to be broken. Fear indicators, they aren't working the way they're supposed to. Markets have become so desensitized. Nothing seems to think is wrong. Geopolitically speaking, macroeconomically speaking, there's nothing that's making sense for this market to sit the way it is. And remember, you may not always have the luxury of time. Market the way it is, and we think, we have time. We have time. It's not always true. You may not have the luxury of time. Because what's at risk? If Iran closes the Strait of Hormuz, that's 20% of the world's oil moves through that small, narrow space. That blockade will push oil probably past 100 plus, and that's going to set a massive domino shockwave through everything. India, emerging markets are going to be very vulnerable to this. Inflation is going to be spiking, and what will the Fed be able to do? Definitely not cut rates. Forget about that. If inflation starts spiking, Fed will start tightening. So what should he be watching? All this doom and gloom, right? So where do you try to read the tea leaves in this kind of a situation when everything seems broken? Well, just don't look at the S&P 500. Keep an eye on gold. That should be a good barometer. Right now, gold is softening. Really doesn't make sense to me. Oil, that's another thing you should keep an eye on. Like I said, see how oil price is spiking, what Iran is doing. See high yield spreads, that spread, high yield, and defensive sector rotation. So keep an eye on the market, see the internals, the breadth, the volume, and sector divergence. If that starts happening, maybe it's going to be happening soon. The so-called impending downward spiral. Finally, remember, fragility is not the same as fear. Just because it looks safe doesn't mean it's safe. Remember thin ice, skating on thin ice. There's a famous Pink Floyd song about that. Thin ice of life, such that everything seems up and working until suddenly it's not anymore. That's how thin ice is. And you don't need a crash. All you need is a few cracks or even one big crack, and that's enough. So I would personally say it's time to, trim your excess risk, keep your cash ready, don't be fishing in this market, because you can't time the shocks, but you can definitely prepare for it. And that would be my advice. Looking at the way the market is positioning itself, I would definitely say being prepared is much better than being caught unaware. I would love to know what your thoughts are, because I'm rather confused with where this market is and the way the world is reacting and the markets are reacting to this. I would say we are in a far worse situation than the pandemic, and that crash was quite epic, to say the least. Anyway, I would love to hear your thoughts. Today is all about macroeconomics because the news over the weekend was quite fascinating, to say the least. I was expecting the market to be far more scared, but it's not. So let's see. And I thought I'd answer some of the comments which came in. Worries loves everyone. Thank you so much, brother Vinod. But time I was watching video now, the US is already bombarded. Yeah, you're right. So this is what this whole thing about this video was. Even yesterday I was watching the video when it was being premiered, and I was like, man, this video, it's the content should be what I'm talking right now. So I do agree. Whereas the risk and the sentiment and the oil, I don't know. I would say let's keep an eye on what the domestic investors are doing in India and the foreign investors in India. Maybe Tuesday would be the day we should be all watching closely, because American markets will open when we are closing today, and that volatility will give us a clear read on what the world is going to be feeling tomorrow, because we are opening actually with the fumes of Friday is what I'm saying. So I would say tomorrow would be a much bigger day for us, because Iran would have also probably reacted by then. Samson Ryan 9604 on the Book of Economics, what he had given that comment, you have given some great recommendations there. So if any of you are interested in books, read Samson Ryan's recommendation. It's a great set of books he's recommended. So other thing which he's talking about, which is ordinary folks getting caught in the middle of this policy flip-flops between ideology and populism. Yeah, that's true. I do agree. We always end up holding the short straw, don't we? Vineet Rao 7420. Sir, I have a doubt if everyone in the globe has a mindset to be frugal. Yeah, that's a great question about frugality. If everyone turns extremely frugal and consumption slows down, and that leads to growth and challenges, and what about high growth business models is true. But at a personal level, frugality builds financial resilience. We should be frugal. Governments can be efficient in their spending, and companies should be innovative rather than expecting mass spending to happen. Maybe I'm wrong. Would love to hear your comments on that too. Rivinesh Kumar 3618. Sir, talk about Intel. Recently, they're building up the new foundries. Yes, Intel's IDM 2.0 strategy is a big deal. They're not just making chips for themselves anymore. They're entering the third-party foundry space to rival TSMC. We'll deep dive into this in another video a little later down the week, probably, once we get a far more clarity on what's happening with this war, which is looming, and whether Sony will also be an investor in value in gaming. That's a good idea. we'll do that too. Anyway, rest of it all, thank you, and you know, I'm also thankful for you guys to watch these videos, and thanks for the support, guys. I mean, I really appreciate it. Sitting in and tuning in and watching these videos means a lot to me that you're there watching this. Anyway, nothing else more to say. It's an evening again here in Chennai. So, depending on which part of the world you are, I wish you a great day. And like I said, I'm recording this much earlier in the day. The way the news cycle is running, the volatility is running, a lot might have happened by the time this video actually hits you. So, whatever does happen, I'll cover it tomorrow. Don't worry about that. As value investors, try and stay focused on what we always preach. And when you see values, enter the market in small spades is what I would say. Thanks for watching the video as always. Wish you a great evening. See you tomorrow with another one.